Main Street Capital outperformed in the last 12 months the S&P 500, which is great, and this is not counting dividends yet. Hey there, today we're going to take a look at investing in Main Street Capital 1 year later. Main Street Capital is a business developing company, and we're going to compare this investment over 1 year. We're going to compare the stock to its peers, and we're going to compare it to the S&P 500. My name is Billy Noguera, and in this channel I talk about stocks, real estate, finance, and the economy. Let's get to the point. Now guys, as you can see here guys, I have 107 shares of Main Street Capital at an average price of $39.40. Now here we see that Main Street Capital yields $2.76 per share. Okay, my yield on cost is 7%, guys. I am set to receive $296 yearly from Main Street Capital in dividends. Now, so far I have reinvested these dividends for over a year, and I have been able to acquire 7.65 stocks with dividend reinvestments at an average price of $38.84, guys. Now in this chart, we see all the dividends that have been paid since I acquired the stock. Now we have received $440 so far in dividends. This amount to a profit of 10.42%. However, look at the price. Main Street Capital current price is $39.61, and I purchased the shares at $39.40. Currently, I am up $21 only. Therefore, in total, factoring stock price and stock appreciation plus dividends, I am up 10.9% or $461, guys. Currently, Main Street Capital is not at its lowest point, but it's not at its highest point either. It's $39. It's trending up, guys. Earnings per share, $4.44. The yield at this point is 6.97%. PE is 8.9, and the beta is 1.29, which is more than the average of 1. Now here we see my evaluation that I have built here. If we look at the Graham valuation, the stock price or the intrinsic value will come to $59.18. If we go by the dividend discount valuation, we get a average price of $58.14. And if we do a multiples valuation, it's $57.57, guys. Now we see a trend here. It is around $57 to $59, guys. Now, so far I have a margin of safety of 25%, and the reason is because of the beta, guys. This stock moves a lot. I mean, look at this price range, guys, from $32 from 52-week lows all the way to 52-week highs of $43 in the last 12 months. That is a lot, guys. Another reason why of this volatility could be that it's only 24% institutional ownership. Now, with my margin of safety of 25%, we get an intrinsic value or my target buy price of $43.72. Currently is at $39.60, so therefore is a buy for me. We see also the earnings waterfall, guys. I like what I'm seeing here. Look at this, revenue versus profits, revenue purple line and profits in green, guys. I like to see this profits. You see this U-turn right here? Great, I like to see this. Now, free cash flow versus dividends. We can see that Main Street Capital can easily cover its dividends, guys, by the cash flow, which is very, very good. Now look, now in this chart, we see the stock for the past 5 years. Not good, guys. It's almost flat. It has only gone up 5%, which translates to a yearly average return of 1.1%. However, look at this chart here. In the last 12 months, guys, is up 16.44% or $5.57. This is great, guys. The S&P 500 in the same time has been up around the same amount, around 15%, which is great. And this is not counting dividends yet. In this chart here, we see comparables for Main Street Capital. We compare Main Street Capital to Gain and VU or the S&P 500, guys. Now look at this, guys. Main represented by the purple line, Gain by the orange line, and the S&P 500 by the green line. Look at this. Main and S&P 500 neck to neck in profits. In fact, Main Street Capital outperformed in the last 12 months the S&P 500, which is great, and this is not counting dividends yet. Here we see that Main Street Capital accounts for 12% of all my dividends coming in my portfolio. Here we see that in 2022, we received $156 in dividends from Main, and in 2023 so far, I have received $284 in dividends. In this chart here, we see what will happen if we leave this investment for the next 30 years. I have made another video. I will link it on the description below for you to see. Now, coming back to this chart, guys, let's remove gain and let's just leave Main Street Capital compared to the S&P 500, guys. Now, look at this. Neck to neck, guys. In fact, Main Street Capital is outperforming the S&P 500. So far in the last 12 months, Main Street Capital is up 19% and the S&P 500 17%. However, this is not accounting for dividends. Now let's go back up here. If I just put 2023 I have received $284, which means I have yield 7.2% in Main Street Capital dividends alone. Now, if we add those 7.2% plus 19% that the stock has been up, there are gains of over 26%, guys. This is totally different from my comparison from JEPI, investing in JEPI over 1 year, which was a complete disappointment, guys. I will link the video in the description below for you to see. It's total difference. You know, JEPI is down here, Main Street Capital is up here. Therefore, guys, clearly we have a winner with Main Street Capital, guys. Stock appreciation this year plus dividends received makes it a total winner, guys. Now, thanks for watching, guys. Make sure to like, subscribe, and share this video, guys. Leave your comments below, guys. Let me know, are you currently invested in Main Street Capital, guys? What is your yield this year so far, or what is your yield on cost, guys? And if you're not investing in Main Street Capital, are you considering investing in Main Street Capital, guys? Leave your comments below, guys. Like, subscribe, and share. Thanks for watching, and bye-bye.